Hi guys, welcome back to the AM Club. This is the best morning show. We're still live on MS24 television. Time now for Lifestyle Daily. So earlier on, we were telling you that we're going to be talking about investment that you shouldn't even dare. And if you decide, if you want to dare because you're a risk taker and you don't mind the uncertainties that will come with it and you want to try it, we want you to be safe out there. So this morning, wherever Kingsley Otchere has been, we managed to smoke him wherever he is to come and tell us to understand the type of investments we shouldn't even go close to and the ones we should. And especially in this time and difficult time, is it even a good time to invest? Does it revolve around, what is happening in your country? Because then, policies would affect certain type of investments and all of that, as we may have seen now in this country. So what time is the best time? And if you decide to want to do it, how best and safely can you do it? Okay? And I like that you send in all your questions, comments, clarity that you require. This is free consultation until he's out of the studio. If you call him, he'll charge you. So you can send your message to 0550 331 511, 0550 331 511, or you can actually tweet us at MS24GH, hashtag the AM Club. Once again, you're welcome. Gordon will join us shortly. But Kingsley, how have you been?
I'm good.
How's your year been? I think
I think
on Zoom.
Yes. Okay. Yeah.
Yes.
But in person, I think this is my first time this year.
You.
I think.
When I see money.
It's not me. It's not me. These days, the economy, so you have to be hiding.
If the person who teach us how to make money complain about the economy, we are there though.
You have to be hiding even faster. Okay. But I'm here. Hopefully I'll not hide again.
Okay. Is it a good time to invest?
Oh yes. Yes, yes. When it comes to investment, it's a very broad term. So it depends on what you are investing in. Okay. Investment as a general, let's say, practice is not something that you shy away from, whether in good times, in bad times, in down times like I have it now. But it's all about what you are investing in. So to your question, it's a good time to invest. But is it a good time to invest in, let's say, speculative assets or assets that tend to promise crazy returns? Then that is something that you have to take a step back, because now things are very uncertain. We are in shaky times, so that is where you have to kind of be more concerned. But if it's about assets or let's say investment opportunities that have proven over time to be able to do well, to be able to give you value in the long term, then this is a good time to invest.
Okay. Over the years, until I started understanding investments and even attempting it myself, one would say that government investments are quite safer. People have said that until recently, then you're not too sure whether or not it is safe or not. In this time that you've said that it's still safe to go into investments, except the type of investment that you're going to, would you say that the government's investments are still the best ones, or you think now, because of what we're seeing, you want to try the private ones? So
it depends. Yeah, the classic textbook definition was risk-free, or government bonds and government instruments are risk-free rates. That's the classic textbook.
Right.
But then recent developments have shown that might not always be the case. So is it a good time to invest in government securities like bonds, treasury bill? I think it depends on the individual, I must say. Now, when you take a step back, why do you invest? There are people that are investing just to preserve their capital. In this case, they are not just looking at making crazy return. Whatever they can get, which is enough to cover for inflation, they are okay. There are those that are investing to be able to make outsized big returns. They are also on that on a different spectrum. When you come to the government bond, now we know with the latest bond on the market, there are some with the restructuring and then the new terms that have been out there, that have been proposed. They might not look attractive to everybody. Yeah. Similarly, when you go to the treasury bill rate, given where the inflation rate is, it might also not look attractive to some people, because if inflation is in excess of 30%, and you are not going to get that on any instrument, you would want to shy away from it. So government bonds could still be interesting for those that are probably maybe for bonds willing to think long term. They don't care about the now, and they are looking to go very deep. That is something that they can consider. But for those that might not work for them in terms of the time it will take them for them to make some good returns, or the return it is even giving you as of now, then you might have to consider elsewhere.
Okay.
But it's all about what the individual think. For me personally, currently I'm not holding, just to personal disclosure, I'm not holding any form of government related instrument. But that's me. I have other friends too who are holding, and they are also okay.
When your advisor says, but that's me.
it varies because we all invest for different reasons, like I mentioned. So for me, given the profile,
I think the ultimate decision would be a cut across everybody. Safety, money security. I think no matter whether you want it in a long term or you want it short term, I think that's one thing that you can find amongst all of us if we're going for investment. So if my advisor is telling me that currently, we'll go to the conclusion of the matter. But in earlier submission, you mentioned that it's a type of investment you're looking at. It's not safe at this time to be investing in, is that speculative or speculating assets? Okay, speculative assets. What are those?
So there are a couple of them. And again, generally some people have high risk appetite. So they like to go in for investment that can give them, like I said, outsized return. Now, for some of these returns, as investment that promises that sometimes the fundamental could not be driven by the actual performance of that investment. It could be driven by something else. People just hoping that it will do well. So one example is, for example, the cryptocurrency. Cryptocurrency has a blend of fundamental plus speculation. There's some people who are buying cryptocurrency, not necessarily because they know the value of what they are buying, but they are just buying it because they fear that it can soar higher in price. Now, those kind of instruments, in times like this, they could be very shaky. And when you look at performance of, for example, cryptocurrencies so far this year, you'd realize that it has not been all that good. So that is one investment that you might want to be careful if you are not really sure about the risks.
Let's stay on that. Let's stay on cryptocurrency. I mean, Goring has had a number of conversations on. I'm sure you've discussed cryptocurrency, but if I sleep and wake up now, I still cannot tell exactly what cryptocurrency is. Like, what is it?
So I just like to make it very simple. Just not to go technical. Let's think of it like a digital currency, which is let's say kept somewhere called a blockchain. I wouldn't want to go, but just think of like a digital currency in a very simple let's say definition. Now, in terms of this digital currency, what can it do? And this digital currency, sometimes it can just represent a store of value. In this case, you're not buying this currency like the way you get a Ghana cedi just to be able to buy maybe your food and stuff. You could just be buying it just to be able to preserve it. That is one function that cryptocurrency plays. Sometimes to some places, they accept some form of cryptocurrency as a means of exchange. So then you can be able to use that one to be able to buy other stuff. But in its simplest definition, just think of it as a digital currency on a blockchain.
Somebody has to purchase that value for you to get money, or what?
Yeah, just
how does it translate to?
Just like any asset. If you, for example, if you buy a stock, right?
Okay.
Like typically, when you want to let's say liquidate or sell off your investment, you basically sell that stock. Somebody on the other side might be wanting that stock, they will buy. So there's always a market, a demand and supply. So the same thing for cryptocurrency.
Okay.
You buy it hoping that when you are ready to sell, somebody on the other end will be willing to buy.
At the value you will place on it?
At the value that the market
is determining.
The market. But the thing is that sometimes this market price is fueled by speculation.
Right.
So not necessarily because of something. So it could just be somebody can wake up and maybe spread bad news. And that could just deliberately spread because the market is unregulated.
Right. Okay.
It can easily cause the price to just tank. Okay. There are instances where somebody can also spread good news without any base or with bases that could drive it up. So there's not that strong fundamental that sometimes could be backing some asset. So in times like this, you might want to stay clear if you don't really understand it. Okay. Another thing you also want to stay clear of is unregulated ventures. Like anything does not have any, it's not licensed by the regulator and it's promising you any form of return, you would want to stay off it, because again, in times like this, these assets could be very shaky. Now, for those who do stocks, you also want to avoid maybe high volatile stocks and even sometimes penny stocks. So penny stocks are basically stocks that trade for less than $1. Like the price of the stock is less than $1. And volatile stocks are stocks that you could just be like as a way volatile. Exactly. Today, just based on something, a momentum, it could just rise by 50%.
What's causing the it could?
Again, the community, the speculation. So 2 years ago, there were a number of stocks that were caught up in that, and they gave very good returns to investors. This is not the time to be doing those kind of
example of that.
So again, in our market, we don't really see, but I know your listeners, some might have exposure outside.
Okay.
So you might have stocks like GameStop. You might have, so that is a stock that 2 years ago, it did very well based on some news. There are examples are not coming to mind, but then I know your listeners basically, and like the whole point is if you are seeing a stock that without any fundamental or anything can just move up. You could, even recently, there was a stock like Kavana. Again, for those who are used to investing outside, it just started falling. Then one day it started again going up. It's very difficult to track the movement.
Okay.
Again, where a stock is being very unpredictable, I think that's the word, very unpredictable in its movement, you might want to also avoid those for now. So basically, avoid anything that would not give you peace when you are sleeping at night at this point in time.
Okay. I mean, I missed the beginning of the conversation, and I was just thinking to myself what an investment is like, and I basically define it in my mind as anything you probably put your quote-unquote money into with the hope.
Yes.
Hope, right?
I like that word.
With the hope.
The expectation.
Of getting something back. So now I'm wondering what a bad investment is. What would you describe as a bad investment? If my initial intention is put money into it with just hope, expecting that this thing should make me money. If it doesn't make me money, do you describe it as a bad investment?
Yeah. So again, I think that's a very good point. And the latter part also I would affirm to that part, because basically when you invest, you have an expectation. So where that expectation deviates from the reality, you could say it has performed badly. So that's also a bad investment. Sometimes to general performance of that investment, like nobody is investing to lose money. At the minimum, you are looking to preserve that money that you invested in. So if I put in 1 cedi, at the minimum, give me back my 1 cedi. So where consistently it is also declining in value, you could also say it's a bad investment. So a bad investment here it depends on how you explain it. But generally, anything that does not over a proven period or a long period does not deliver what ideally you would have expected as of the time you were investing in, you could say it was a bad investment on your side. And it's okay to cut your losses and walk away.
Okay, 2 things. So I'd have thought that once you're hoping, you also know that it's not certain. It's never 100%, is it?
Yes.
But there's 100% on the amount of money you put in there. So that at worst, you can get your money back.
Yeah.
But what you be the loser on is the profit or whatever you're supposed to get on what you invested on, right? So if you did an investment and your money is safe, as you have said, would that still be a bad investment?
No.
Your money, the one you took there, but you didn't get the profit on it. No. Would that still be a bad
it wouldn't, like I said, the first thing is a bad investment, you define it. So if in this case, for me, I expect in this current time, everybody, more or less, most people should be investing with the minimum aim of at least preserving their money, like keeping their money safe at the minimum. So if whatever you invested in is able to do that, I wouldn't necessarily say it's a bad investment.
Okay.
That return could sometimes be realized in the long term. So again, you have to look at the time period.
Okay.
In the short term, it could be doing very poorly. You may not have been making that gains you were expecting, but in the long term, maybe 3 to 5 years or even a 10-year period. Because if you are investing, we normally say invest with a long term in mind. It could eventually give you back that return. So,
is it still not a bad investment if I invest and after 5 years, all I have is still my principal? It's still my...
Yes, exactly. Exactly. There are instances...
So you are the one defining it now.
As a bad investment.
There are instances where, for example, I might buy a stock. And maybe after a while, I'm realizing that, no, this stock is giving me negative return. I don't see that it is going to turn around its situation. There are instances where you know that, the company is doing well, everything is going on, but for whatever reason, it is not reflecting the price. It means the fundamental is still strong. You can be patient and then hold on. But there are instances where the fundamental could shift. Maybe you went to invest in a company that is producing something. They've been doing so well, and now nobody is demanding their product again. Management has become very bad. So now you don't have confidence in the ability of the company to do well, which would mean that you as an investor too would benefit. At that point, you can walk away. So a bad investment, again, there are instances where a stock or an asset will not be giving you the return. But so far as you know that what you are holding is strong, you might want to hold it for a longer period of time. But there are instances where you could buy something, even within 1 month, you could just sell it because you realize that it's not going to give you what you want to give you.
I think I kind of agree to what you mean by you define bad investments. Where for you, if you didn't get anything on your principal after 5 years, that's not good for you. But for me, that it's possible that money I could have used it to shop shoes in a day. And I feel like, you know what, let me invest it. And if I go after 3 days and the principal is still safe, at least it's safe from the shoes that you didn't need, right? So then you're unlucky with profits, but at least you save that money away from something that you're not going to. So it really is true how you define a bad investment, which, I mean, we all agree that you want some profit on it. Because if you put the money somewhere else, maybe. Or if you started a business, then maybe. But if you take it and then they have to count the money back into your hands. So what's the worst that can happen? Your principal to Ushi?
Oh, yeah, there are instances where your principal...
Example.
Mostly in a fixed, okay, so in investment that normally give you a guaranteed return or close to that, they can tell you upfront what your return could be. Normally, you will not have such a situation. So it's very rare. I wouldn't say impossible. It's very rare, for example, for your treasury bill, for you to lose your principal. It's very rare that you go and do a fixed income mutual fund and you lose your principal. It's like everything, 100%. It's very rare. But in the stock market, it's possible.
Okay.
You can buy a stock. There are some stocks that are currently doing less than 70% from where they were. So if you bought at the peak, then it means you would have lost about 70%. There are some stocks that have lost 90%. It's very possible. In the crypto market too, it's very possible. So typically, risky assets or those assets that the return is not defined upfront, but then you invest in it with the hope that you can make more than what you will get from a typical fixed income instrument. There could be the instance where you could lose all your money.
Ish.
We've listened to a lot of motivational speakers, a lot on social media, on Instagram and all that. And, with a nice sound in the back and all that. And I've also heard, even among religious organizations, some pastors have said and all that. What would you advise? If you had money, would you advise that a person invested in, perhaps, like you said, some of these stocks and bonds and stuff, or you'd rather the person starts up, because these are both investment, or you'd rather the person starts a business with it?
Again, it depends. Starting a business is not meant for everybody. That's the very first thing we have to understand. Everybody is wired to be able to run a business, or run a business even 2 ways, full-time or part-time. Still, not everybody can be able to manage a business. So for such a person, giving that suggestion might not work well for the person. I think the whole point is there are so many investments out there that have been made to fit your personality and your profile. If you are somebody who likes taking risks, some people in this market will say they are buying the dip, because dip basically means the price has fallen, so they think it would go up, so they are buying now. Those people might want to curate an asset around that. There are some too that want to play it safe. Let me go for the passive way of making money. I think the key point to just, let's say, lay emphasis on is that in a time like this, have a diversified portfolio. Diversified here means don't concentrate all your money investment in just one particular investment instrument. You should try and spread it across a number of different instruments. So instead of maybe doing 100% in, let's say, in treasury bill, you could do a percentage in treasury bill. You could do a percentage in another different assets. And you could even hold some part. Cash is also an investment strategy. There is no, if you look at anybody who is managing funds, there's always that reserve that you put aside, which will be used to invest in futures. But you're just keeping it there. You don't always deploy 100%. So the key point here is that invest. But investing in business, if it's for you, go for it. If it's not for you, then you might want to look at the other side, which is a financial asset or even a physical asset. It's not even always about stock and treasury bill. Sometimes you can even go into real estate if you have the means. You could do it 2 ways. You could pool money together. There are even real estate investment trusts and what we call REITs on the market. You can be able to, for those who are interested, they can research on it and then be able to go into it. So REIT. Real Estate Investment Trust, and call it REIT. You can look into it for those who want to have some exposure to real estate, or you could directly go into it where if you have some money, you could buy some land, you could put some money together with your friends and family. And there are a lot of assets that you can look at. So it's not just about doing business or financial assets. Physical assets could also come in handy in a period like this.
Okay. So it's never true that if you invested money, you can get 100% of it. It's never true. It's not the case.
You can get 100% of return.
Yes.
Okay, it's possible.
It's possible?
It's possible. It's possible because.
Why do you have that sinister smile? I don't mention men's gold.
No.
I don't want problem this morning.
No. It's possible that. But again, like I remember the very first thing I said. For one, we are trying to avoid speculative instruments or instruments that we are just buying because of hope. Those ones, some people will say it has been able to deliver such returns to them. If you look at those who were in cryptocurrency somewhere in 2021, some people had 100x, 1000x. So it's possible, but we are trying to avoid anything speculative. Even for stocks that have good fundamentals. When you go onto the US market, a stock like Nvidia.
Never heard it.
Okay, then let me try and use a stock like Meta.
Meta is not Facebook.
Facebook, exactly.
How is that stock?
Yeah, so okay, so I think I probably just take a step on a stock. If you look at a stock like so Meta as a company, they have a stock, their stock. And that stock, if you bought it somewhere in November, by now you would have made more than 200% return.
Okay.
Because it was $90, then currently it's around is it $270? Yeah, around $270. So if you bought it, then it's possible. Now, is it a good company? Yeah, it is a company that we know. And the other instruments, like Nvidia has done over 100%. Apple has done over 30% on a dollar. So there are instruments that can give you 100% return. So if you are looking at doing that, is what.
So you didn't mention any company in Ghana.
In Ghana, we have instruments that have been able to do more than 30% so far this year on our stock market. Benzo Oil Palm, I think they've been able to do more than 30%.
They're publicly listed.
Yeah, they're publicly listed.
Okay.
Yeah, on our stock market, those stocks that are struggling right now are the financial. The financial stocks, the banking stocks, they are those that are struggling. We have other stocks that are doing very well, that are doing over 30% this year. So on the stock market, it's very possible, to your question, on the stock market, it's very possible to make 100% return. The same way you can make the 100% return is the same way you could also lose it. So if your strategy is to invest in stocks, then always go with companies that, like I said, they give you peace. Like, you know that this company is being run well. They are doing what they are performing financially. They are performing what they are fundamental, which is what makes up that company, is still strong and unshaken. If you have such companies, then you could go in for it.
Let's drill it down.
Sorry.
Let's drill it down for a minute. You know the suit collectors.
Yeah.
If you're part of the people that would have somebody come around, they have a card, you give them a certain amount and all of that, is that investment? Is that
okay? So that is what those who just you give them a card and
they come around, they collect the money, they record it, and then at the end of the month, or I think there's an agreement, a number of days or months.
They take one.
What I don't know is that are you giving the exact amount? That's not investments. I think they come with a little money on it.
Yeah. So exactly. I think the one key thing that distinguishes an investment from saving, one key thing is the return.
Yeah.
That's the one key thing. And also, two, investments are typically long-term. Typically. Now, for a typical collector, it's mostly savings than investment.
Okay.
Because what even happens sometimes, based on what their pricing is, you will get your money minus one day, which could go to the collector for consistently, because he has taken the risks to come around every day to remind you that save. So typically that for those who do that, the main goal is to be able to have some get some lump money at the end. They don't trust themselves that they could consistently be saving that 10 Ghana cedis every day. So that is what the collector comes in. So that is typically a savings. The same way for those ones that are what we call the Rosca, those that they put the money together and then every period somebody else takes it.
Yeah,
we'll take the lamp. We'll take the lamps.
It's called what?
Rosca.
Rosca, right?
ROSCA.
So by the end of this month, I will take it.
You take it. You take it.
So that's still not investment.
No, that's mostly savings. Like,
what about Lotto?
Lotto is not like okay. So Lotto is not an investment.
Because if I use 2 CDs
and I can make
and I go and PEM, like to show that and then.
Yeah.
Okay, so for the purpose of our discussion, let's take a step back and define what an investment then is. An investment is setting aside money.
2 CDs. In this case, the 2 CDs.
2 CDs. With the hope or expectation of making a return. But it's being informed by a good financial decision.
Yes.
That is where.
But so the good, who's defining the good financial decision? If it's not Kingsley Otchere, is that a book?
So it basically means you would have there's whatever you're investing in, there's a value around what you're investing in. You would have done your research. You would have looked at the risks, the return. You would have done some.
You've not done Lotto before because we do.
Yes.
We calculate the risk. That today maybe I don't win.
Yeah, like they'll be mentioning the numbers. It can't tomo like
good. And so we can even
and they tell you how much you will make if you use 2 CD to stake Lotto. What am I alone?
So we can even add an extra layer to our definition. When you pick a Lotto, are you in control of what the outcome would be?
This is the same as the investment.
Cryptocurrency. I'm not in control.
When I take my money to Kingsley Otchere's bank right now, and you give me a product in the form of investments, you're only telling me the how much I'm likely to make on it. But you can also shop and tell me that.
Okay, so let's just use maybe 3 assets to just distinguish this.
Okay.
So if I look at is anybody the word is anybody in control of the outcome? If you go and buy stock, a stock's price could be driven by the company's financial performance. So management are in control of what can translate into the value of the stock going up or going down. By delivering consistent good results, that could translate into that. So there is a key driver that determines the value.
National Lottery Authority.
We look at, so that's why when we even go to a treasury bill or a bond, again we are looking at the way the government behaves, manages fund could also send a signal as to how much investors are willing to play. So a government that is consistently doing well, keep it like until recently, that is consistently doing well and stuff, you could realize that there's much more confidence. How investment assess the yield is also there. There's a value driver. When you pick Lotto, what is the value driver, for instance? It's just about sampling, hoping that something would chance. Where it is chance, then you are now operating outside investment. You are now doing gambling, speculative gains. So you look at in football, for instance. That's why we also say betting is not an investment. Again, you are not in control of it. And that is why even in professional leagues, the players themselves, they are not allowed to bet. Because where they are allowed to bet, I can go and score an old goal. Again, go and stake against it. But you and I, we don't know what's going to happen. We are not in control of that. We cannot influence that outcome in any possible way. The value driver, we cannot influence it. So that is also. So if you have to then go back to our definition, setting money aside 1, with the expectation of making a return 2, by it being an informed decision. Where informed there means you've researched, you've done your study, you've done your analysis, you've spoken to people, or you've done some bit of like work, due diligence. And the 4th one is you're not just making any random guess or any you're not leaving things to chance. There is something that clearly drives the value.
Let's go and look for the meaning of gambling.
Yes, we should.
Because half of the time, if I walk into the bank with my money, or if my relationship manager calls me during that never makes me sleep.
Buy the dollar.
Okay. Or Jessica, no, I think there's this product, I think you like it and all of that. I mean, she tries to let me understand, but it's still in my mind. I feel like I'm gambling.
See,
and especially when the dollar came. When the dollar, the high and rises of it, I feel like there's a teeny tiny feeling of gambling over there.
Yeah, you see, in this case, sending that product to you, she will tell you the risk. She will tell you to describe the product. She'll give you every information, even give you possibly, if you want more information or materials, she can share all of that to you. She can tell you what would cause the product to rise, what will cause the product not to rise. Like she can be able
there's a certain level of certainty.
There's a certain level of certainty, confidence in how it is delivered. By gambling, a pure gambling, it's mostly chance.
The best way people are not happy with you. Look at that. They are looking at us funny that if I'm investing in Barcelona and I know that Barcelona is a good team, that is my surety that they will win this game. They will win.
It's by chance. See, no matter the workings that you be doing,
it's still by chance.
It's still by chance.
Okay, reality check. Are there some days that you look around you, say the economy, like particularly, that you say, you know what, no matter what my investments advisor tells me, I don't think it's a good time to invest?
Mm-hmm. Are there some days?
Yeah. Or you think every day is a good day to invest?
Oh, every day is a good day to invest, like I said, based on what you are investing in. So every day is a good day to invest based on what you are investing in. So there are instances where holding cash is key. So typically what happens is that in periods of recession, people normally prefer to hold cash. They hold cash a lot.
Yeah.
Because they are hoping that it's based on a number of things. One, they are holding cash because they feel asset values would fall. And when they fall, they want to be in the position to be able to take advantage of those significant falls. So that is why they will not rush into, they will hold cash. They could also be holding cash because we are living in a period of uncertainty. You could be laid off, you could lose your job, like something could happen. So you want to hold cash so that if emergency comes calling, you are in a position to be able to meet the financial demands that will come out of it. So people will hold cash. So there are instances where holding cash could be key. And I say even cash itself is an investment strategy. If you look at a typical portfolio, and you can even speak to some of the fund managers and stuff, you might see some components being kept in cash. This cash can be used to top up on already existing investments or buy new existing investment. So yeah, there are instances where you just hold cash.
Can I buy a car for commercial purpose as investment?
For commercial, no, so you have the answer. For commercial purpose, yes.
For commercial
Yeah,
purpose.
that's an investment.
Okay. Can I buy a car for myself to go to work for commercial for as an investment? Because I don't want to pay for transport and all.
You know that is indirect investment. In its pure sense, if you are buying it just for personal use, we might not say it's an investment. In its pure sense.
Okay.
But then, again, these days that conversation has shifted a bit because you buy a car. I bought my car at, let's say, a price. Currently, that price is like almost times 2. So somebody will say, okay.
I thought if you buy a car, the car depreciates.
Car depreciates, but based on the times you are in, even some car prices are still going, like some old models are going for, let's say, really high prices. So typically, when it comes to buying cars for personal use, we wouldn't necessarily say it's an investment. But you can link it to what extra value you could create. Maybe you were always late for work. So buying the car now saves your commuting time, and that makes you more productive, or it translates into more. So you could, as I say, indirectly, you could say it could unlock some value for you. But where it is mainly for personal use, we will not typically say it's just an investment.
I think, sorry to cut. I think it made me want to ask you if all financial investments are purposely for financial returns.
So people, at a minimum, for an investment, typically you are investing for a return.
Definitely, but is the return always financial? So like you said, if I work at MS24 TV and I know that, okay, I get paid this amount of, okay, why am I shooting myself in the foot? I'm making this money at the end of the month, and I need a car. So I'm investing in a car. Well, in the end, getting to work early, being productive and all that. My salary won't change. It's the same salary, but I've invested. Am I necessarily gaining money back? I don't know if you get what I'm saying. I'm not necessarily getting back.
Are you saving from the money you'd have used in commuting commercially to school, to work? So
in a way, that's still earning.
So you could look at something financial. There's an indirect play here, because in this case, if maybe you were spending 100 cedis, like 100 cedis, but now the fuel, maybe it's the car you bought, is very economical, so you're now spending 50 cedis. That extra 50, you can think of it I shouldn't think of it like, okay, it's just there for me to spend. Let me rather go and put it in an investment instrument, and then be able to make some gain from it.
All financial investment for financial return.
For the word financial investment, typically.
Would you advise, or what would you advise? Do you think that, let me be biased a bit, among creators, what would you advise creatives to invest in? Because creatives are usually people who, it's not, they are not in a fixed job where it's like you're paid at the end of a month, you're sure that some money is coming, but you're working, you get a contract, you get a gig, you go do and all that. With such people, what kind of investment would you recommend? Would you, I don't know if you get what I'm saying, I don't want you to get technical, but would you say creatives should go into business or creatives should invest, look for these good investments you're talking about, like let's say stocks and stuff, and invest in?
Yeah, so the good thing is these asset classes that or the various examples of investment that we've given are open to everybody. It's not, let's say, industry defined or specific. So as a creative, if you have the means, the very first point about investment is it's not even about the industry, it's mainly about who you are as a person. You can be a creative and you love taking risk.
Right.
Then you could go in for those risky investments. You could be a creative and you wouldn't want to take risks. You could go in for that. So it's all about how your personality aligns with the investment instrument. The other thing is that sometimes when it comes to investing, you can invest in what you can easily relate to. So, for example, some creatives can investing in art. Buying art is also a form of investment because you could buy it with the hope that in the future you can sell it for a higher price. So you realize somewhere last 2 years, and even now the NFT came up, and people were, or like I just use again to make it simple, like a digital image, just make it simple, and people were into it. They were buying it with the hope that they can also sell it to someone else at a bigger price. They could relate to it. They were buying. So exactly. So it could come from, as a creative. Basically, when you're investing, always try to understand what you're investing in, and it makes it easier if you understand what you are investing in. Some people can invest in collectibles, like some people could be just buying like some vintage items. They could be buying it with the hope that they will get a buyer who will be willing to buy some of those vintage collections. It's also one, so it's not always financial. The golden rule is know yourself, which is the first one. And mostly understand what you are buying. And if it's something you can easily relate to, you understand it very well, and it makes sense, you could consider it in your asset class.
Okay. In wrapping up the conversation, so Singlet is sending a message says that he insists that investments is a theoretical synonym for gambling, and that thinks that betting is also investment. However, he went on to say that, please just take this serious. I wish you would talk about starting investments small too, because an average Ghanaian is also waiting to listen on how to invest his money between 500 Ghana cedis to 1,000 Ghana cedis. Because real estate that he's mentioning is for rich people. Now, please let him advise us on how to invest with small amount of money. Let's start with how much you earn. Send it. Let's break it down for you.
Yeah. This is a very good question.
Yes.
And if you remember with the real estate, because I mentioned that could be expensive, I give an alternative.
Of course.
Which is the REIT, which I said gives you some exposure. So if you cannot go and buy real estate, like as in you cannot directly invest in real estate, you could consider that. So for them who ask this question, the person can just read about REIT. There are a number of we have the public bank, they are REIT. You can look at it, and then if it's something that you are interested in, it gives you some exposure to real estate assets. You can be able to go into it. But to the broader question, when it comes to investing, what I typically advise, and even most, let's say, people in the space would recommend, is that you use what we call dollar cost averaging. It's a big word, but let's break it down. Dollar cost averaging here means don't wait for that big money to be able to put it in. Today, if yours is 10 cedis, invest 10 cedis. If tomorrow you get 5 cedis, invest. So each time you are just putting in some, like you're averaging out what you can invest in. So when, for example, if I look at the various approaches to all my investment accounts, when I was doing mutual fund, I never said, okay, let me wait for 10,000 or 20,000 before I start investing. I started small with I started right from national service when I was earning. At that time, I was being paid. A little above the
399. Oh, you are the more than the 500 people.
I was being paid a little above 559. A little above 559. But then I was kind of like investing. And then consistently, as my salary grew, my investment amount to also grew. When I went into stocks, I also didn't start right away from big. I started with, I think like $100. You cannot even start with $50. You can start with $10. Or whatever equivalent you can start with, then you consistently grow it over time. So the golden rule of investment is don't wait till you have all the your target investment money before you can go into it. For some investments, you can even start with just 10 cedis. Some mutual funds give you the chance to start with just 20 Ghana cedis.
If you went onto the Momo portal,
Yeah.
you go to financial services, you can get something that's pretty easy for you. So no matter how much you earn, I think you can try it first. 500,000. So saying that, we hear you, but there's so many options out there that you can try. But I mean, thank you. This has been a good one.
Yeah, always.
Yeah. I'd like to see you more. I don't like this Zoom. Okay.
So
okay. How can we find you? Do you want to share your commercial number?
Oh no. So on
commercial number.
You can. I'm very active on social media.
Okay.
So on Twitter, name Kingsley Otchere.
Okay.
SK_Otchere.
Okay.
On LinkedIn, Kingsley Otchere. Facebook, Kingsley Otchere.
Okay.
Same SK_Otchere. I try to make it consistent so that if you cannot find a Kingsley Otchere, you can just use the SK.
How is Kingsley SK? Isn't it KS?
No, so.
Oh Lord. Okay.
I just
go for SK, please.
You can see how this offline. But yeah, so you can reach out to me on any of these platforms. My DMs are always open.
Okay.
Feel free to reach out to me. And,
Kingsley, please. Thank you so much.
Thank you very much.
All right, guys. So, Mr. Man here had a great conversation, right?
Yes, indeed. We went to South Africa, and if you're thinking of going to South Africa...
How long is it from here to South Africa? How many hours?
Is it 4, 6?
Okay.
I think so. Yeah, but the experts will tell you all about it. Stick and stay.
I'm a piano, it's a big vibe, but the girls them know. Steadily, heavily, we are getting it. I'm a piano.